Have you all had an opportunity to come up front and see the art display?
Well, my name is Anthony Burks. I'm a native of Florida, West Palm Beach, born and raised right here.
All right. All right.
I've been a professional artist for the last 25 years. I do a little bit of everything to do with the arts. I run my own business right now, doing printing and designing logos and flyers and stuff like that, on top of doing my fine art. Everything here is pretty much, original for myself and designed by me.
And for sale.
And for sale, yes.
Excellent. And your name again?
My name is Anthony Burks.
And the best way to reach you?
Is by email or Facebook, but I pass on my cards to you.
Okay. Thank you, Anthony. Appreciate it. Thank you very much.
What about me?
Okay. Yeah. Don't you want to talk about Christmas? We're talking about taxes?
Yes. Okay, I'm originally from Indiana, son of an Air Force sergeant, so traveled a little bit. Spent about 3 years of my early years in Hawaii. My father was stationed there, so he bragged. Some people were in Vietnam, he was in Hawaii, so he could decide. He called it the better choice. So. Went to Purdue University. I got a bachelor's degree in accounting. Stayed up in the Midwest. Worked in Cleveland, Ohio, General Electric. That's where I met my lovely wife. Then went to Harvard Business School for 2 years. Finished that with an MBA. Stayed in the Northeast for about 3 years. Came down here to South Florida in '98 to work for a company called Hoffman Financial Corporation in their investment division. Did that for about 3 years until they decided to exit particular commercial real estate business that I was in. Basically been on my own ever since, doing a few different things, but for the last 5 years I've focused exclusively on accounting services. And for 2 of those, actually I think it's closer to 3 now actually, been right there.
Right here in this community, which is something that I really applaud, because Sean could be anywhere doing anything and he's here with us in this community making a difference. Not only is he a tenant here, but he is very involved in the community, and he didn't touch upon that, but he is involved in several political organizations, Black Village Voice Political Action Committee, and also extremely active with the Black Chamber, even though we may not have seen some of the things he's behind the scenes, and we all know he's the numbers guy, so that's what he does back there. So thank you, Sean, for all of your contributions to the community, and we would now go into your area of expertise.
All right. Okay, thank you. Thank you for the opportunity, Shalonda, Darren, and the family for this opportunity to speak to you, professionals and business owners like yourself. Well, what I want to do today is just kind of take a bigger approach. Things I don't like to try to do, and certainly in a limited amount of time, is get into a lot of numbers and certainly a lot of tax code and stuff like that. I really find, especially for business owners and professionals, it just doesn't provide as much value, because if anyone had a chance to look at my business card, you'll see that I'm offering solutions. Because I believe as an accountant, that's what my job is to do, and that is to provide you solutions to what is most important. And in your case, as a business owner or professional in our free market capitalist system, your responsibility is to provide information, accurate information, in terms of your financial performance to the various stakeholders of your business. Now, those stakeholders, first and foremost, is whoever provides you the capital, probably yourself. In the case of a lot of new clients are small businesses, your family, friends, colleagues, banks, private investors, and of course, at this time of year, one of your stakeholders is the federal government. So, therefore, you have to put together the picture of how well you did. Now, what I try to do is provide that information, but again, it's a function of how well the information you provide for me. And, therefore, it's the old adage, garbage in, garbage out, good information in, good information out. So, but the good news is that I have developed a model and a way of working where pretty much I get everything ranging from bank statements and credit card statements all the way down to, I've had a few clients that bring in bags of receipts and this and that and say, have at it, and nonetheless, that's what I do. So, and at the end of the day, I produce a financial statement, and at that time, you're able to address your concerns to various business stakeholders and, of course, the tax government. Now, of course, this time of year, everyone's focused on taxes, understandably so. And what I want to do is take a little bit different approach at how I look at taxes, and I try to communicate to my clients the way I think of taxes and that situation. First and foremost, let's understand a tax is a consequential expense. Now, what do I mean by that? What I mean by consequential expense is it is a function of decisions that you've made throughout the year as a business owner or professional. So if you make good decisions, you might wind up making money, and ultimately you will have a tax liability. If you make not so good decisions, or maybe the market just didn't cooperate in the way that you thought, you wind up having more expenses than revenue, and as a result, there's no tax liability, or maybe very limited liability. So keep that in mind, and because again, when people come in, and especially this time of year, they'll just say, Sean, I need a refund. I need the taxes low. Can you help me? Can you do this? And I usually turn to them and I say, look, you should have seen, if you really want the best outcome for your business, you should have seen me in June, July, February, sometime earlier, where we can obviously work together. We can look at your financial statements. You can decide, okay, is this where I should be as a business owner? Is that not? And then you can make decisions. Okay, if you come to me after the fact, the decision's already been made. At this point, I'm just like a scorekeeper. All I'm going to do is take the information, provide, put it together, and say, here are the consequences of your 366 days of decisions and actions. So that is basically what I start off with every client. And then you just go from there. Now, but that being said, is it my job as a professional to keep your tax, or to produce a situation where you have the lowest tax liability possible? Absolutely. So I do apply the laws, I do ask questions, I ask follow-up questions. I may be, working on it, and I think of something, I research it, and I'll come back to you, and I'll ask. So it's a give and take, and I think at the end of the day, when I produce to you a tax return, be it for your corporation, your LLC, or individual, you can have confidence that I have minimized your tax liability as much as I can based on the information that I have. Now, keep in mind, if you want to lower taxes, which is a lot of times what people say, well, in a theoretical sense, it's real easy. If you're a business owner, spend money. If you spend more money than you take in, then you're not going to have any taxes. Now, of course, there is a consequence to that. It goes back to what I said earlier about all the various stakeholders you have, because you have some business owners, and I've had cases where people say, I want the absolute lowest tax possible. So fine, take the information, I provide it. If we do that, we might wind up having a loss. Then they turn around and they say, okay, well now, I want to go get a loan, or I want to do this and that. So, and of course, these lenders will ask for a copy of your tax record. They'll look at it and say, oh, you didn't make any money. Now, you can't turn around and say, oh, no, I really made money, but, I just didn't want Uncle Sam to take it. I can tell you from many banking relationships that I have, but unfortunately, it doesn't work. So, what you put on the tax return is what you are going to have to live with. So, again, there is a balancing act that I make sure all my clients understand that, hey, I understand you want to minimize your tax liability, but at the same time, especially if you're a growing business, which I think most of us here are growing professional, you want to balance it out and make sure that you have, something that is good. Now, in the case of business, again, it's pretty much anything, the official definition by the IRS is anything ordinary and necessary. So it's pretty broad, pretty wide. And then you go from there. Now, if it's a personal return, It gets a little more technical because for a variety of reasons, our Congress and President had on a certain date signed into law this guideline, that guideline. So, you know, if you rent your home, that's not deductible. If you own your home, the taxes, and if you have a mortgage on it, are deductible. So it's just decisions that people make, and you just have to learn to live with it and go. If you own a gas engine, not deductible. If you own an electric vehicle, it is deductible. So, you know, just some of the things that goes on in there. So what I try to do, and I encourage my clients to do, is really to, you know, when they get into this, oh, my taxes is too high or this or that, I say, well, first thing, let's look at your business. And the first thing that I suggest to them is, okay, is your business where you want it to be? You know, in terms of growth, in terms of cash flow, stuff like that. Well, if the answer is no, then I just say, no, let's not talk about taxes. You need to focus and take your capital, take your investment dollars, and do what is necessary to grow your business to get to that point. Now, once you kind of get to that point, then we can start talking about strategies of deferment and other things like that. Now, that is that. Now, for example, I see Frank Cummings here, who's with AXA Advisor, a good colleague of mine. He has a different strategy because he's an advisor. So the people that come to him have already reached that point. So now they have dollars that they want to invest, be it for their retirement, their children's education, or whatever. So there's a different risk tolerance, different goals and objectives. So the advice and tax strategies that he would have for the dollars he's dealing with may be different than mine. Doesn't make it right or wrong, it just means it's different. So that's an example of how when you take it from one level, then you go to the next level, and then if you go to the highest level, then you would actually be in a situation where you have like an estate, and you deal with an estate attorney because now you're thinking of when you're dead, and now you can pass things on. So, you know, for example, if anyone, just because again, since it's not public, if anyone, for example, during our election cycle looked at Mitt Romney's taxes, you can see there's a perfect example of someone, again, I'm not talking about politics, I'm just talking about someone that's wealthy. And you see that he has money that obviously he makes personally, then he has money as a trust to remind people that an accountant is to advise. I just go over there. So just keep in mind the accountant's job is not to tell you what to do, to buy or sell, and certainly if it's in the pursuit of taxes, to do that. The second and quick thing is I just want to say is that, again, I think I touched on it, the role of a tax preparer is to minimize your tax liability. It's not to get you a refund. Now there is a subtle difference. They should be able to want to accept what's called third-party authorization. So in other words, near the bottom of your tax return, you will have a place where it says, do you authorize this preparer to speak on your behalf if there's a problem? I always say yes, so that way my clients are never bothered. They just say, Sean, there's a problem. Fortunately, it doesn't happen too often, but when it does, I usually resolve it pretty quickly. And that's it. And then just real quickly, the shameless plugs here. I was fortunate enough to have an article written in the Legacy magazine. So if you go to PalmBeachPost.com, go to the Legacy magazine in their business section, page 13 or 14, one of those. A little quick thing where I do get a little more technical about some tax strategies. And then last but certainly not least, I do have a monthly newsletter. It goes out the 10th of each month. So if anyone would like to get, again, more technical stuff on a monthly basis, there's a number of people here already got it. If you haven't, if you come see me and give me your email address, I'll be glad to add you on. And again, I think it's something worth.
What are your fees for
It depends on ultimately the amount of work that I have to do. I mean, for a easy form, it's usually it's a little $40 for a, let's just say, very moderate range return, individual return, maybe 100 if you're self-employed, probably closer to 200. So, and then businesses, LLCs, and actually S corps and C corps starts at 400. And one of the things which I do that I think I try to differentiate myself from is, you know, as an accountant, you know, I tell people I see your numbers, so I know what you can afford. So, what I try to do is there are times where I just said, you know what, I know what my fee is, but I know that you can't write a check, or you write a check and I'm going to get a $12 fee because it won't clear. So neither of us are happy. So I will just modify it down accordingly and do it as such. But those are basically what I do.
All right. Thank you.